Bitcoin rejected from our level of interest we were watching last week at 65K and moved down following the bearish path, breaking the pivot and bouncing off of our next level of interest. Is Bitcoin going to move further down? Let's dive in and talk about it. Hey, howdy everyone, Tony here. Hope you're doing well. Looking at Bitcoin again this week. As always, we're going to start at the larger time frame and work our way down to the smaller time frame and see if we can find any patterns and clarity in the price action. We're also going to take a look at the correlated assets, DXY and ES, and see if they either hinder or contribute to our analysis here on Bitcoin. So with that, starting off at the larger degree on the daily, just looking at the chart, I still think there's a possibility that we're putting in an impulsive move to the downside still. This 4 is getting a little bit big compared to this wave 2, so I'm a little bit sus on this situation, and we have to see how this plays out. If we play out nice and quick here and just complete it and head down for a wave 5, I do think this would still look okay. Any kind of sideways here or anything like that, again, I would have to reconsider where we are in the count at the larger degree and start considering that this is some kind of double zigzag or something else going on, as this correction would be getting pretty big in comparison to this correction up here. A few things to look for when we're looking for a wave 5 to complete. Again, we're looking for a motive move down here to complete the wave 5. And then we're looking for a most likely target. For this guy, it's going to be down here at about 55K is where the box starts. And then we got to move down to 52.5. 52.5 is a level of interest that carries over from the left side of the chart at the larger degree. Level that has played as support and resistance in the past. It's been a flipper in the past, so I'm keeping an eye on that as well. We may not get the move down there, and we may just come back down and sweep this low one more time, but this would be a level of interest if we start cascading over and falling down. Also looking at the final channel here, it is a bit skewed because of the size difference between the 4 and the 2, and the proportions are a little bit wonky. But typically what we're looking for is the center parallel or the outer parallel to play as support and the potential bounce that follows. The next thing I'm looking at for this impulse, if this does complete, is the momentum. Right now on the EWO, we have a low of a high here, and this is the highest piece of momentum, which would correspond with this being a potential extended wave. And in this count, the extension would be in the 3, and we are getting a drop of momentum as we break this pivot lower, the 60K pivot here, which all correlates and contributes to the possibility that we're completing an impulsive move here, and we might get a change of delivery at the smaller degree, if not the larger degree. So some things are adding up here that this could be a potential for an impulsive move complete. When we look down further down, we have some more questions that we have to kind of consider and answer down there. But from here, we have a nice move down, a corrective move that stands out, and we've got a swift move down. And right now, we have a nice separation between this correction here and whatever this is at the moment. The pivot that keeps this all together at the larger degree, just that stands out on the daily, is 62. So as long as the price action from down here doesn't pierce this, I think we have a decent possibility that we're completing an impulsive move down to complete a pattern at the lesser degree at minimum. Now, is that the most bullish thing or is that the most bearish thing? In this instance, both the bulls and the bears would like to see an impulsive move completed here. So they both agree that an impulsive move here would be ideal. And why is that? An Elliott Wave, an impulsive move or a motive move, either start a pattern in Elliott Wave or it can complete a pattern in Elliott Wave. So that's would be the ideal move in my opinion here. We get a nice clean impulsive move to the downside. And then from there, we see an retracement, if not internal to this impulsive range that we complete here, then to the larger impulsive range here. And we get a deeper retracement before even pulling over, or this is the end. And we end up going back up, flipping these into support and sending it back to the upside. So again, that would be the most ideal setup for bulls and bears. A nice completed impulsive move here. We've got some things on our side. The price action is slowing down, momentum's waning, and we're completing a decent looking pattern at this point on Elliott Wave. So some things are adding up for a potential change in direction coming next week. The other thing that's changing next week is we are getting a change in the month, which can contribute to volatile moves or shifts in direction or pivots. So again, a lot of confluence in time, Elliott Wave, price action, levels of interest, support resistance, all adding up. At what degree, that remains to be seen, and we'll look at our correlated assets and everything else, see where they are. But let's go ahead and dive into the lower degrees and time frames and see what we got there. So last week we were looking at potential fractals to play out. This is the daily on the left, and we have the 4-hour here on the right. And just by using the price action and what the price action is trying to convey to us, we came to the conclusion that there's a possibility that we would continue the fractal, and the PA is telling us that we have a correction within parallel lines at multiple degrees. And what that would mean is that we are looking for more downside, as corrections pointing to the upside typically mean that we're heading down, and the trend is going to continue to the downside as we put in lower highs and lower lows at various degrees. And that played out good. Last week, we were looking for this pivot to hold, 65K to reject and head lower, sweeping the start of the bounce. And I think we can move even further down into this degree and time frame here and look at like it has the same look to it as these higher degree, higher time frame patterns as well. The sweep may have been all that we need. We are getting some violent reactions off of the level here. But again, the price action has proved nothing to us on the bullish side, and it's still conveying a bearish lean, even at the smaller degree. A couple things that show us that, for one, is that we're still putting in lower highs and lower lows as we go down, even at the smallest degree. We haven't broken that yet. And the price action itself, it looks corrective. This does not look like an impulsive move to me as of yet. We could base a long just off of our price here, and the fact that we're rejecting, we swept these lows at multiple times. But just going off the price action, again, the first thing that the bulls have to do before the bears are second guessing themselves is we have to break this level at 62K. That breaks the lower high and lower low trend that we're seeing to the downside and would have us kind of guessing where we are in the count. So this would be a key level to keep an eye on to see if we break above this level here. But for now, I think the major level and the first level that the bulls have to beat is going to be at the 60K. We've been teasing and messing around in here a little bit, but if we can start breaking above that, we can turn this into support and flipping it up, like that's the first thing that the bulls want to see. Now, when it comes to Elliott Wave, a couple things could be happening. Right now, all we have is a 3-wave move up to the upside and a 3-wave move to the downside that's printed right now. An Elliott Wave, that could mean many things, as zigzags are the most common pattern in Elliott Wave. And if they start something, this could be the start of a long, drawn-out process, and we could be going sideways forever and ever until we finally get a break. Again, they can start basic patterns like flats and triangles. They can start complex patterns like double sideways, triple sideways corrections. And if this is a larger degree and not something completing at the lesser degree, like we were talking about before, again, we could be going sideways here for quite a while. And then we get a lot of good content of everyone putting 5 different counts on this thing at once. The one that would rip the Band-Aid off the fastest is we have a nice expanded flat, which would give us and produce a impulsive move to the upside or a motive move to the upside. Since we did breach the start of the wave A, there's a chance it's an expanded flat or a running flat. So those are the two patterns that I'm looking out for here the most. If we do get a nice impulsive move to the upside, if we end up doing some more corrective move to the internals of this range, this corrective range here, then we'd be looking more for a triangle or something of that nature. So the bulls don't want this by any means. The bears, this is what the bears would most likely want, just because at this point, if we don't complete an impulsive move here, and this is the start of a pattern that's moving sideways, eventually we're going to continue on sweeping these lows here and completing the pattern down. And it's not going to be the start or the potential start of a breakup in an impulsive fashion. So I'm hoping that the next week clarifies exactly what's going on here. I really hope that we complete as a impulsive move to the downside just for clarity and completion's sake, and that we can see where we are in the larger degree trend and look for a trade in the long direction to get a little bit of an upside and a deeper retrace. And based off this price action here, I think that's what's going to happen. When we dig deeper down, though, there's still a lot of things that have to play out. Again, we're still rejecting off the 60K level. As you can see here, we've got a lot of rejections coming off, and the price action doesn't look super impulsive. We do have these sharp spikes, like I said before. We'll have to see how the U.S. futures and stocks open and hopefully it will produce some clarity and give us an idea of where we are in the account. So to go over what the bulls need, bulls right now at the smallest degree here need to break above 6723, flip it back into support, and continue and change the trend from lower highs and lower lows into a break of that and start flipping these into higher highs and higher lows. Bulls just have to hold this level at 72.3 or even up at 62.193 and send it down impulsively, keeping the corrections pointing up and swift moves down. So that's what I'm watching for overall on Bitcoin. Let's go ahead and dive into correlated assets real quick. Taking a look at the correlated assets, as we can see here, I have some lines demarcated on the chart, and what they represent is the futures open here on this first line on the left. And as you can see, we got an open. There's some waffling to the right on the ES to the upside. Same thing over here on Bitcoin. Right when stocks open at 9 a.m., ES dumps, Bitcoin dumps, ETH dumps, dollar jumps. So the correlations are still there by various degrees. We're still getting some lining up on both ends for this move down on ES. So the correlation's still pretty tight here. And what that means is that bulls and holders and everybody invested in Bitcoin and its correlated assets really want ES to continue the upside. Worst case scenario, sideways, so that BTC doesn't just crumble down to oblivion and crypto along with it. And that's all going to depend on what the dollar does, in my opinion, just because they are adversely correlated. Where the dollar moves up, ES moves down. Again, it's headwinds, tailwinds, correlations aren't 100% every single second, but they can work as an indicator to let us know potentially where the headwinds and tailwinds are. We do have a little break of that where starting over here, we have DXY moving to the downside and ES still moving to the downside. A couple things that could mean is that ES just hasn't caught up yet. And when the futures open, we're going to get a move up as just so it can catch up with the correlations. Or it could be the fact that even though they have this headwind in the DXY, ES is just so beat up from the AI bros sending everything to the upside. And that it's just time for that to retrace. And regardless on what tailwinds it has or headwinds, it's just ready for a retrace. And the correlations are starting to break down a little bit because of that. So those are the two things I'm looking at as far as the correlations overall go. When we look at the dollar, I think we still have a potential for more movement to the upside. We've been tracking this pretty good over the last several months. And I think we're still in a potential uptrend here at many of the degrees that we're looking at. Last week, we talked about the broadening wedge, and if we broke above that and continued up, we'd find this area as support, and we would continue up to the upside, and I think that played out nice. Next level of interest to watch that is above us is going to be up here in the 101.85 area, and we haven't touched that yet. We're pre-ran it, so there's a possibility, if my count is right, that we're going to head up and sweep that at a minimum, but if we break far enough above it, we're going to look to that to play as support. Zooming back into here, last week we were watching, since we breached this high or this pivot over here, we were looking for potential for it to flip to support and move up, or for it to come back down a little bit deeper to 100, 197 and find support there and potentially move to the upside. That played out with our level here being front ran. We held it and we moved up to the upside. And I think we have completed an impulsive move in the form of a potential wave 3 to the upside at this point. We front ran our most likely target for wave 3 here, and we're coming down in a corrective fashion at the moment. When we come to the end of things in Elliott Wave, typically we like to see that the conviction has been lost in whichever direction the initial trend was heading, and we get a swift move down, breaking that pivot, that wave 4 pivot there, indicating that the higher low has been broken and that there's a potential for a directional change or a change in delivery. We haven't gotten that yet here, so this is a possibility that we're still putting in some kind of wave 4. Right now I have it from our level of interest down here. I have a potential for a 1-2 and then some 1-2s built into that. And I think right now we have a high likelihood of putting in a wave 4 and continuation to the upside eventually. We have not hit the most likely target for a wave 4 at the moment, but there is still a possibility that we could come down for one more low here, hitting a most likely target and continuing up to the upside. So I'll be watching for most likely targets in a wave 4, that being the fibs here, the base channel here for a potential bounce area and completion of an impulsive move to the upside. If we dive deeper down on the EWO, you can see we're getting some deviation between the highs at this lesser degree, where we have the momentum in the wave 3 here. We got a breach higher on the price, but momentum's waning on the EWO. So that's what I'm keeping an eye out for at this larger degree. Continuation of an impulsive move to the upside. We're still putting in higher highs and higher lows. Corrections are pointing down. Nothing as of yet is pointing to the downside on the DXY. But of course, we are in a news-driven environment where everything is tied to the news. So anything newsworthy could send it in either direction. But as far as clarity in the Elliott Wave, I think we still have an uptrend on the DXY, which will affect the ES. If the DXY is heading in an uptrend, then I would expect that the ES is going to struggle to stay in an uptrend as well, at the minimum, if not be partially affected by it. If we zoom back out, we've been tracking the ES decently well. We had a most likely target for a wave 5 up here. And the thing about most likely targets, it's not going to call the top every time. It's not going to call the pivot every time. Most likely targets should be used as more of an indicator or a warning sign that things are coming into an area that typically you can find a pivot in. And anything beyond there, you're getting a little bit greedy. As you can see, we didn't pull a pivot right here, but we moved up a little bit and we've been going sideways since then. So because of the size of this move to the upside, as you can see, all my numbers and letters, all these moves look a lot more shorter in time. So we have to consider that this move up here is of a larger degree just because we've been going sideways for a couple weeks now. And because the proportions between this move up here and any of these corrective moves over here is quite a large difference in time and a little bit in price. So I think we've completed something here to the upside, and then we're putting in some kind of correction to the sideways here for now. The pivot break up here throws some shade on what's really going on and adds more questions, in my opinion. So either we had a top over here, and then we're putting in some kind of sideways configuration or pattern before we get a continuation to the upside, or we'd have to consider that this move completed a little bit earlier. Maybe the pivot was up here in our most likely target, and that the start of the correction is actually over here, and that we've completed it, which means this is just an internal retracement before we head up. So at this point, nothing at the larger degree has broken, saying that this is the top and we're heading on down. At this larger degree, it still looks like a corrective move just based off of the proportions and this move to the upside and this sideways that we've been putting in. Of course, I could be wrong. Elliott Wave isn't always right. I'm sure you've seen Elliotticians change their counts many times before nailing something. But for right now, I think we still look okay up here. But my opinion is going to change pretty quick if we break this pivot of interest at 72. Zooming in here on the 1 hour, looking at ES. Again, there's some conflictions on what I think this pattern is. We could have a WXY double zigzag down here in the form of a wave A. We could have a wave B up here, and then we're putting in some kind of wave C for a flat. There's also a chance that this could be some kind of sideways correction as well. So we'll have to see. I think, again, the pivot is going to be 72.32 at the larger degree. At the smaller degree, we are putting in lower highs and lower lows, and we have a bit of a downtrend on at the lesser degree or lower time frames here. First thing that bulls have to do is break this trend, starting with the level here at 75.05. And that would be the initial pivot break, and then we'd be looking for an internal retracement before some continued upside is a potential. Some other pivots and levels that I'm keeping an eye on are all over here. I would recommend alarming them. And the more that we kind of break below and retest and move down, the more likely that the bears are still in control, and then we can see continuation to the downside. This would correlate with DXY moving to the upside. Again, if we end up moving to the downside here, we could see a squared up, potentially breaching this, sweeping out some shorts, and then we get continuation further down to the downside. If this is all done and this is something else, and this impulsive move is complete at a higher degree, and we get a move down, the higher likelihood that ES goes up rises, in my opinion. If we end up breaking this level, I'll be watching for it to flip into support for continuation, and I would think Bitcoin would do the same thing and head up as well. So over the next week, I think these are the two ideals I'm keeping an eye on. Ideally for the bulls and the bear traders, we want a clean impulsive move or motive move down to the downside, potentially completing this larger degree impulsive move to the downside. We can start looking for longs, if not internal to this wave 5 impulsive range, then to the larger impulsive range. But in both cases, an impulsive move down would be ideal. Or on the other hand, just based off the price action that's printed now and the muddiness of this move to the downside, looking corrective potentially, could be putting in some kind of sideways correction over the summer, then we would just have to recount this area and reconsider what that move was. These are the two things I'm looking for. Keeping an eye on these levels is ideal at this time. They've played in the past, and those are going to be the levels I keep an eye on and play off of if clarity surrounds them as well. Those are just my thoughts for now at the moment. As always, I roll with the waves as I print. If you have any questions or concerns, please leave a comment down below. I read them all. If you learned something new or find this analysis helpful, please give it a thumbs up and subscribe. It's going to be more every week. Especially this week I have off, so I'm going to be putting in some time. If you want to learn more about Elliott Wave, you can watch some other videos on my channel here on YouTube. Also, come check me out on TradeDevils.com, where you can check out the belt system and learn a lot more about technical analysis in this bear market and prep for the next bull run, if not transfer it over to other markets. I would definitely recommend coming and checking out the Discord as well. Trade Devil has been posting trades in the free Discord, and he's been nailing most of them. And his P&L has been going up to into the right over the last several months. So definitely come check us out over there. But until the next video, trade safe, trade clarity. Take it easy. Later.